Yo, what is up YouTube? Welcome back to another video. Today I'm going to go over my prop firm model. So this model is specifically for prop firms. Um, if you're an experienced trader or know a little bit about trading, you know that the prop firm space is a more gamified version of the live space, right? So trading prop firms is a lot different. Well, I don't want to say a lot, but it can be quite different than um, trading on an actual live account, because on a live account the amount of money you put in is the amount of money you can lose. But however, on a prop firm account, that is different. So this model is going to be more for prop firms, right? So let's just get into it. I'm going to kind of keep this video short. It is currently 10 o'clock for me. It's 10 p.m. right now. So, I'm trying to get this done today because I don't have time tomorrow, and I want to get this video out for y'all. So you guys can watch it and study it over the weekend. But let's just get right into it. So, a 2026 model. So, if you don't know, I have another model, which is my Power 3 model. I'm still going to be trading that model, but that's going to be more from on my live account. That strategy performs really well on live, but not as well as on prop firms because of the risk management I do with it. So, this is going to be more for prop firms, and since I'm going to be focusing on prop firms, I'm not going to be trading on my Power 3 model as much. So, I have developed this model for three main reasons. So my original Power 3 model, I really couldn't trade PM session or Asia session. As you know, Asia session has been printing out really well. So this model is pretty easy to, plug and play with all your different sessions, right? So I want to be able to trade Asia and PM session more. Two is to be able to pass prop firm accounts quickly and more efficiently. And three, just reduce the total amount of time I'm spent trading and the complexity, because I am currently a college student, right? I have a lot of stuff going on in my day. I would prefer to, have, 1 or 2 hours in the day where I trade, right? Don't have to think too much, get in, get out, and yeah. So how did I develop this model? So as you know, I'm primarily an ICT trader, but I do have a lot of external knowledge on other trading uh, traders, I guess, or other different kinds of trading outside of ICT. So first of all, it's JJ Simon. If you don't know who he has been getting pretty big on TikTok and YouTube for being fair price, right? So he really brought the idea to me of having a fair price to return to, which is basically mean reversion. So basically, mean reversion is returning back to the average, right? So fair price is the average, and price should come back to it. So he kind of gave me the confidence to trade mean reversion, because I really didn't see anyone trade it except for him. So he kind of gave me the confidence to go to mean reversion, right? So another one is Togashi Kataoga. I'm probably butchered that last name, but he's also known as BNF. He was a legendary Japanese trader who turned 13,000 to 1.5 million, who strategy was focused on catching rebounds off a deviation off of a moving average. So he was a legendary trader back in the 2000s. He was really famous for the JCOM trade, I believe that's what it was. Basically, a company sold its shares for completely the wrong price. He was able to capture it and made a lot of money. But overall, his strategy was catching, short-term lows in a bear market and catching short-term highs in a bull market. And basically, the way he did that was, if price was X amount from a 25-day moving average, and he had other confirmation, he would buy that because people were over panicking, they were overselling, right? In this example, we're doing a bear market because they like bear markets more. But if price was X amount from the moving average, he would buy, thinking that, okay, people are overselling, but the companies themselves are still fundamentally strong, right? So this is just an oversell, and it's a good time to capitalize on a good price, right, for a buy. And of course, ICT, or Michael J. Hudson, who popularized the idea of fake breakouts, or as they're known as liquidity sweeps for him. So of course, parts of my model: VWAP, volume weighted average price, fake breakouts, and then trading windows, and my prop firm / accounts of trades. So reasoning behind VWAP: this is a lot of research that I did, and personally, I'm not going to go through everything. I'm just going to go over the couple of main ideas. So first things first, what is VWAP, right? VWAP is your volume weighted average price. In simple terms, it's basically where at what price did the most amount of transactions go through, right? And the reason why that's really important versus normal moving averages is because normal moving averages don't really care about the transactions, right? 5, contract move in lower volatility might not be as important as maybe like a $15,000 contract trade that may not have moved the market as much because maybe there was like opposing buyers or something like that. So basically, don't want to get too far into it. It's just that where is the most transactions? At what price do the most transactions go through? Let's just focus on that. Okay. So of course, VWAPs used by major institutions. This is a given fact. If you don't know, VWAP is actually a very common benchmark for institutional traders. Basically, the better fill they get versus the VWAP, the better they are, right? And so, and this is obviously because what VWAP represents is where the most transactions have been put through. So since with these banks, they're moving billions of dollars, I can easily move the markets, right? Obviously, they don't want to, just enter and see the price fall. And then so because other people can just, get onto their positions, they're going to piggyback off of them. And it's really hard for them to get out of the markets, right? Because if they push price down, then they get worse fill, but then their fill pushes price down, etc., right? So what they do is they try to get their positions in pieces around the VWAP, right? Because the VWAP is where the most transactions have went through. So obviously that's the best place to get into your position without it being known, right? Because the millions and trillions of transactions will mask that, right? Until they get their full position in and they and price moves in their given direction, right? So because of this, VWAP for me is considered fair price, right? Because if the majority of people are paying, around the same price, right? Because VWAP is where the most transactions have happened. Most people are paying, buying, or selling at that price. Then obviously it's a fair price, right? Because everyone's agreeing to it, right? But buyers are willing to buy at that price, sellers are willing to sell at that price. There's really no in between. And since that price is a fair price, if you can buy below it, right? If you can get a cheaper price versus everyone else, that's obviously a discount. And if you can get a higher price than everyone else, if you're short, right? It's obviously a premium. So as we learned in ICT, we want to short in a premium and buy in a discount, which is what VWAP does. And since banks and institutions are entering around VWAP, right? Let's say they're buying, right? They're going to buy below the VWAP, right? So obviously, if we buy below the VWAP, where are we going back to? Obviously, VWAP itself, right? To offer fair price again, if anyone wants to counter the buys with shorts, right? So that's basically with VWAP, right? You don't have to understand the whole technicals with it. This is the research I did, but for me, I use an Anchor VWAP, not the normal VWAP. So if you just search up VWAP or volume weighted average price on TradingView, you get a straight line. For me, I use Anchored VWAP, which is basically the same thing, but it only calculates when I want it to calculate at a certain time. So for me, the reason why is because VWAP is obviously still a moving average. It averages it out, right? So for example, if in just generally, New York will obviously have more volatility than Asia or London, right? But the thing is that if I'm calculating data from Asia and London, that lower volatility will get priced with the higher volatility. So obviously the volatility in New York would obviously not be, accurate, right? So for me, I just use an Anchor VWAP and I'll get into the Anchor time key opens that I use and we'll go from there. So basically this whole chapter is reasoning behind VWAP and why I should use it, right? So next things next, using VWAP. So this is so we got all the boring information done. You really don't have to listen to what I just said. I just think that that's just the research I did, and if some people want to look at it, critique it, maybe I did something wrong, right? Then that's perfectly fine. So Anchor VWAP. So as I explained, VWAP works best when anchored to key important opening prices. So there's three ones I use. 6 p.m. open. That's obviously your first print of the day, right? That's how you trade Asia session, right? 2 is 9:30 a.m. open, right? That's your New York Stock Exchange open, right? That's New York regular trading hours open, very key open, right? Because the largest financial asset marketplace comes online, which is the New York Stock Exchange, with companies making up the Nasdaq, S&P, and much of global finance traded at that time, right? So obviously you're going to see a lot of volatility there. And then 1:30 p.m. session open. That's basically the regular trading hour, second 4-hour candle open. So I see that as a possible reawakening of institutional order flow after a lunch break, right? So Obviously, PM session is the session I trade the least because, well, it doesn't really have that much significance other than it's just the time, right? 6 p.m. is after we reopen after an hour of trading, of no trading. So a lot of, news events, data that happens between 5 and 6 p.m. EST has to get immediately priced in at 6 p.m. So that's where there's the volatility is. And then 9:30, obviously, you have that so much increase in volatility from all the, increased participants in the marketplace from the New York Stock Exchange, right? So VWAP development windows. So if you don't know, VWAP has to reset, right? VWAP has to develop, right? If you just use VWAP for the first 1 or 2 candles of the day or of the session, right, it's not going to be very accurate. So for me, I'll wait an hour for VWAP to fully develop, right? This is only a minor sacrifice for more accurate data, in my opinion. Of course, you can test, maybe 30 minutes. I feel like the least you should be doing is 30 minutes because that's just a really good, for my testing, I believe 30 minutes is probably the least amount of time you want to, wait for VWAP to develop. But since this strategy is primarily traded on a 3-minute chart, I think waiting an hour is definitely more beneficial because you have more candles, right? If you're trading on a 1-minute chart, then you can obviously just do 30 minutes, right? So obviously you only use one VWAP at a time, right? So only use Asia VWAP during Asia. Obviously that's common sense. And so in this strategy, what we're doing is we're looking for price to return to VWAP because we assume through our entry criteria that big institutions have gotten in and price will naturally come back to VWAP, right? Because if you go from discount, what is the next target? Equilibrium or fair price or VWAP and then premium, right? So, and obviously it works really, really well on ranging markets because ranging markets favor mean reversion because obviously we're just consolidating or moving back and forth back to where the mean, right? But also on trending markets, it works decently well as well because with the time filter I have in, it really helps you stop yourself from trying to catch a falling knife. And once you do catch a move, it's usually a pretty good pullback into the VWAP, right? Because remember, banks don't want to enter too low inside the range. They want to wait. They want to see price trade back into VWAP, right? So that's where a lot of orders are resting. So price will most likely want to come and draw back into that, right? So false breakouts, right? So false breakouts, there's a lot of history behind false breakouts, and this is what I have in here. So if you don't know, so obviously I think most of y'all know, ICT popularized the idea of a false breakout a lot with his turtle soup, liquidity soup, whatever you want to call it, right? But they were actually very well known before ICT has ever come in. So if you don't know, where ICT gets its name turtle soup is from these groups of traders called the turtles, right? So these were, I think, a group in the 1990s, correct me if I'm wrong, but there's this legendary trader named Richard Dennis. He and his colleague was arguing on whether or not, like, if some random person off the street could be a profitable trader, and he was one of the best traders in the world, and he taught a bunch of really common people how to trade, right? And those people made a lot of money. But basically, if you just search up his win rate was usually around 30%, sometimes in the low 40, like close to 40s, right? But his win rate is obviously very, very low, right? Because the strategy that he was trading in the simplest form was buying the breakout of either a 20-day high or 20-day low. So, but the thing is that if you only have a 30% win rate, if you do the opposite, then you would have a 60% win rate, which naturally led to people fading his setup in the opposite direction. So one of these people that was really, really famous as well was Linda Bradford Retke. I don't know how to pronounce that, but she was another legendary trader. She was also one of the Market Wizards. If you never read the Market Wizards series of books, it's basically a bunch of really, really famous traders sharing their experiences, and I believe she was one of them. And a lot of her strategies were published in this book called Street Smarts, and one of her most famous strategies was fading 20-day breakouts. So essentially when price breaks out 20-day high or low, which what the turtles would buy, she would sell or do the opposite, right? And she called that the turtle soup, right? Because it was exploiting the breakout traders, right? Which if you learn ICT, that's where he got the name turtle soup. And obviously ICT was the one who popularized the idea of fake breakouts, turtle soups, whatever, right? She took her idea of turtle soup and refined it with swing highs and swing lows, and that's why I use to this day. And we'll kind of see how false breakouts, work, right? So So FBOs, which is just the abbreviation for false breakouts, right, is very, very simple. And this is the whole idea behind the model, is to be very simple, quick, to form easy wins for evals and fundeds. So how do you define a false breakout / soup? You want to find a swing high, swing low after the VWAP development windows. So if you don't know, VWAP development windows, 6 p.m., 9:30, 1:30 for Asia, AM, and PM session, right? So you're only looking for swing highs or swing lows formed after 6 p.m., right? So the reason why I do this is to help filter out trending days, right? Because if you're trending days, right, you're going to have very strong moves to the upside or the downside, right? And if you have strong moves, then if you refer to swing points, in the previous day's range, you might find yourself trying to catch that falling knife. However, if you just focus yourself on the range, right, obviously the swing point, the closest swing point would obviously be very high in the range, right? So for example, if we were displacing lower, right, if we were just making these lower lows, right, let me see if I can draw something here. Kind of show you. I don't know how to draw in Google Docs. No. Okay, whatever. But basically, what's happening is if we're making lower lows and we're just displacing like this, the closest swing low is like right here. So if we do get the closure here, it's a pretty strong sign, right? But obviously, it's probably not likely we're going to get that sign, and we're probably going to have a no trade day, which I'll show because I have trade examples. So, and then wait for a candle closure back inside the higher low. So it does not have to happen in one candle. It does not have to be a wick. Price can trade through it maybe, and then trade back up through it. All you need is a candle closure back above the range, and then entry after candle closure back inside the range. So very, very simple, and I'll show examples of this. So trading windows, can develop this. VWAP development windows, right? It's the 1 hour after each key open, right? 6 p.m., 9:30, and 1:30, right? So 1 hour after each. So 6 to 7 on Asia, 9:30 to 10:30, and then 1:30 to 2. So no trades in these windows, okay? And then the actual trading sessions, which is where I'm looking for, my setup, which is the false breakout back into VWAP, right? Is 7 to 8, 10:30 to 11:30, 2:30 to 3:30 p.m. So obviously you can adjust this, right? You can adjust the trading windows. The VWAP development windows, the only thing I would recommend or something that you would change is you can make it shorter, but probably I would not go below 30 minutes. So, if you're going to change this and you want to, trade earlier, right, this would be 6 to 6:30, this would be 9:30 to 10, and then 1:30 to 2, right? That would probably be the lowest amount I would trust. So obviously you can trade longer, but for me, I found that these times work the best because it really stops me from a lot of losing trades. And then obviously putting together the model, this is the whole model, right? Model VWAP, right? So as you can see, we're looking for a reversion back into VWAP as we expect price to go there to give institutions to enter, or institutions have already entered on a premium discount, which should move markets back to VWAP, right? So our entry signal will be a false breakout. So obviously we have the anchor VWAPs, right? Development windows, trading windows, bias, right? Above VWAP, we're looking for the shorts. For below VWAP, we're looking for the longs. Entry, swing high, swing lows formed only after 6 p.m. for Asia, 9:30/1:30 for New York, right? Rate of a swing high if above VWAP and rate of a swing low, and then closure back inside the range to find the false breakout. And obviously, we're not looking for any of this, right? We're not looking for any of this until our trading windows have hit, right? So if a setup forms at like 6:48 p.m. for Asia, we're not taking that, right? The only setups we're looking for is once this hits, right? Once 7 p.m. hits, we can start looking for setups, and then we let me just restart. So 7 p.m. hits for Asia, or 10:30 hits for AM, or 2:30 hits for PM, right? Only at that point we can look for a false breakout, right? Back to VWAP, right? So we have some trade examples here. So this was written on the 22nd. So today's the 22nd. This was written on the 21st. So today's the 22nd, Saturday. So this is literally the most trading week. I believe this is Sunday. I believe this is also not Sunday. I believe this is Friday. This is also Friday, and I think this is also Friday as well. I think this is all Friday. So we can look through this. Oh my god. Can I not see this? Okay, you know what? So we're going to zoom this in a little bit so we can see this better. So let's zoom this in by 200%. So as you can see here, this is a short trade. As you can see, we have this is a PM session trade. So as you can see, at 1:30 p.m. to 2:30, we don't have any trades, right? No trades, right? We're not taking this trade, right? You can see that we have a swing low here. We close back inside the range. I'm not taking this trade. You can take this trade if you want to, but for me, I need to see a setup. I need to see that false breakout form after 2:30. So this personally for me is not a valid trade, but you could take this if you wanted to. Technically the trade forms after 2:30, but for me, I want to see us take out a low after our trading window starts, right? Which is what happened here. As you can see, we have a swing high formed after 1:30, right? So as you can see, this is a high that forms after 1:30, right? As you can see, we get that closure back below, right? As you can see, this happens in one candle. We enter on the next candle, targeting a 1.5 risk to reward. That is the target for this model. It's always going to be a 1.5. And as you can see, that plays out pretty well, right? So after that, no rule trades, right? Trade session ends. Next trade, as you can see, this is one of the days where, as you can see, we have a very strong trend, right? And this is where you get protected, right? With this, with the swing highs and swing lows that have to be formed inside the session, right? Because, I mean, I guess this isn't the best example, but as you can see here, we don't close above the swing high, right? It looks like we're close here. However, this actually closes on the dot back on this line. So you can see, so we don't get in here. That saves us this long trend, right? As you see, we don't have any runs below the swing low, right? We don't have a run below this low. We don't have a run below this low, right? And we just expand higher. So that's a no trade dip. Last things last, Asia session, right? I believe this is also, and this is on Thursday. So this is also Friday's price action because this is Asia session on a Thursday. So 6 p.m. opens here, right? I don't consider this a swing point because if you cover up all of this, right, this is obviously not a swing point. So if you don't look at any of this price action, this is obviously not a swing point. So I would not consider this to be a high that I would like. As you can see, I have marked out a failure to breakout. And the reason why this is a failed one and we did not take it is because, as you can see, we do close below VWAP, but as you can see here, we expand higher. Should we enter? No, right? Because we're above VWAP, we should be looking for shorts, right? So as you can see here, this is actually an invalid FBO. So I think I put this in here to be an invalid, I believe, because this closes back above VWAP, right? But you can be a little discretionary with the rules. But however, for me, I did not see this as a valid entry. So I think I put this in here as a false rule break, right? Even though the setup looks clean and it hits, right? So that's overall the trade examples. As you can see here, this is my prop firm choices. So there's three main firms I recommend, which is Apex, Lucid, and Tradeify. If I had to give a roadmap, I'll probably do Lucid and Tradeify first because their max allocation is only 50K, so it's pretty easy to get that. But with Apex, it's 20 accounts, so you need more money, which is why you get Lucid and Tradeify first, because you just pay out money with that to fund Apex. And then these are the accounts I recommend. And then this is the trading plan. So for me, I'm very aggressive on evals, but more patient on fundeds, because if you think about it, evals are cheap, right? But you also don't have any benefits for staying on evals for so long, because you don't have any earning potential. The money you earn is just so you can pass, right? While funded accounts represent real hard to replace capital, because you spent your time, passing the eval, you spent your money, right? You spent your activation fee, but also if you blow your funded, right, you're basically blowing capital, right? So phase one eval, right? So 50K Lucid Flex will be the framework I use, but it's basically the same for all these accounts. I risk 350 for a 525 possible gain. That's a 1.5 risk to reward. 2 consecutive wins, best case, I'm done. 2 consecutive losses, worst case, I'm done. I do have max 4 trades, which is on the universal rules here. So as you can see, universal rules, max 4 trades a day, time stop must exit all positions by 4:30. That's very rare, because if you look back at my trading windows, right, PM session ends at 3:30 for me. So holding a trade for an hour is very, very rare, especially with the small 1.5 base hit. But Obviously, 2 consecutive wins, you're done. 2 consecutive losses, you're also done. Or you get enough for a winning day and you're happy with the amount. Maybe, you know, you only need like an extra 250 or something. So obviously you wouldn't be trading anymore. So obviously these are the rules. Risk 350 for 525 gain. I want to pass at most one whole trading week. Ideally just 3 days, right? If you want to be more conservative, right, you can just reduce this risk. It's pretty easy. Buffer, right? Shift to survive. So you don't want to, you know, this you're playing very aggressive. This you're shifting more to a survival thing or more conservative because now you actually have capital to trade with, right? The money that you make can actually go into your bank account. So I drop my risk to 150 or 200, same daily limits, right? And I grind to 5350 for buffer for max payout. So I go for max payout. Max payout for Lucid is 2K. So account must be at 50 or higher because of intraday drawdown, right? Once you withdraw 2,000, right, 1,600 is yours. It's the profit split, right? Drops back to below 51, drops to 51,500, right, which locks down the drawdown floor to 50,000 with the $1,500 buffer, and then you just grind that thing back out to 5350 and just get another payout and repeat. So the one warning I want to give you is if you're going to trade this model across multiple sessions, which you can do, right? I have outlined 3 different sessions: Asia, New York AM, or New York, what the hell? Such as Asia and New York AM or New York AM PM session, right? So if you're going to trade Asia and New York AM or New York AM and New York PM, I would split the accounts between the 2 sessions because if you just take the classic daily loss rule, right? If you just take the 2 loss rules, right, it's pretty likely, or not pretty likely, but definitely possible that you take 1 loss in Asia, 1 loss in New York, right, and then you're done for the whole day, right? Because you're splitting that limit, right, that daily limit across more time, right? So for me, if you're going to trade, you know, Asia session and New York AM session, I would just split the accounts between them. So if you have 2 accounts, right, you'll trade 1 in Asia, 1 in one in Asia and 1 in New York AM session. This also increases the probability of you getting at least 1 payout or at least 1 of these accounts passed because, you know, you have a wider rate of price action, right? There's more price action for you to trade, right? So there's a better chance of you maybe catching a very, very nice move, right? Especially as you know, Asia session has been printing really, really well, you know, these last couple of months. So, you know, if you get a nice couple of wins in Asia, right? But then AM session is trash, right? You still have a very healthy profit from account to trade on, right? On the next day, right? And yeah, so that's basically it. Last thing I do want to show you is just this very quick VWAP schematic that I drew up. So this is basically the model. So basically we have VWAP, right? So you have your VWAP development window right here, and then you're marking out all this buy side and sell side that has formed inside this window, right? So obviously we want to mark any of these lows because it's above VWAP. So if we're above VWAP, we're looking for shorts, right? As you can see, we have a run here. This will be a possible entry. Then we run below VWAP, right? This is a possible entry long. But then, as you can see, we create more swing highs and swing lows or liquidity during this move lower. So, and also this is obviously, you know, inside the range that we're trading in, right? That key opening time. So obviously you can take another short towards the end, right? As you can see, this is above VWAP. And yeah, so that's basically it. I will link this PDF if you want to read it more. We'll also link that drawing. But other than that, I'm going to try to get to bed, and I'll see you guys next time. Peace.